Hi, this is Joseph. Today is March 20th, FOMC day, Wednesday. So this is a quick review. For those who missed the chat room, this is going to be, I'll walk you through what we were looking at when the market opened and then where I finally found the trade that I was most comfortable with. Uh, this particular trade right here, this is the bar that I actually took this trade on. Um, as you can see, I didn't trade this reaction right here. This was pretty smooth. I'm sure a lot of other people saw it. I just stayed away from it. I wasn't too sure. I wasn't too comfortable. You can see this is a 5 minute chart, by the way. So I'll go ahead and put in a few things here, but I'll walk you through exactly what I was talking about in the chat room. That way you can more or less see how I process this and why I made the decision to stay out of the way when there looked like there was probably a couple of good opportunities here and there, but I really wasn't all that comfortable with it. I just stayed out of the way. So one of the things I was talking about, we spent probably a good 40 minutes talking about it, and it's this area of consolidation right here where it just kind of went sideways. I referred to it as consolidation. Obviously, it's just a tight trading range. It was just going sideways. I'll go over there to the left, and then it'll expand. You can see what I'm talking about here. But I want to point out, keep in mind that this was the bar, this bar right here. This was the bar that I found my trade on right here. And that was all I was comfortable with. At that point, I determined that it was likely two things. First of all, that it was most likely going to and probably going to hit my 5.25 point target. And the other thing that I was trying to avoid was the retracements. So I'll show you what I was doing along the way. And I did this in the chat room as we were waiting for me, as everybody was waiting for me to find the opportunity. Now, again, it does not mean that there wasn't any other trades in here. I mean, I'm sure a lot of people were able to scalp out some of these moves inside of all of this that you see here. I used to do that. I don't. I'm looking for 1 to 3 or 1 to 5 trades per day. That's all I need. Sometimes I'm just going to get one trade. Today I got one trade. I didn't take this last move right here where I'm moving my cursor. There I probably could have, but at that point I was kind of done with the day, and we had already wrapped up the chat room at that point. So this move right here, again, what I was trying to do was get a trade that's going to hit a 5.25 point target. That's what I'm going for in every trade. If it's going to set up and then the trend develops and it goes to the 5.25 point target and it's getting close, I'll move my target if I suspect that it's going to go further. If it shows signs and it's that kind of pattern, you can just you can see it. And then I'll just manage that 5 minute trend. That's what I call it, managing the 5 minute trend along the way. Right here in this area, I still was not really too comfortable with the way it was behaving. I still thought that if I was going to get into a trade, that it was going to pull back and it would pull back larger than my stop loss. And I didn't want to use a bigger stop loss than I normally use, especially on in a situation like this on this particular day. And then looking at the data, I was also talking about this as the other reason why we talked about it for so long in the chat room. If you trade FOMC month after month, year after year, and you acquire all this data and you collect it and you can compile all this data, you'll be able to know after a while if FOMC, if trading on that day is even a good idea for you. You'll notice that sometimes you will get really good opportunities. Other times you won't. And at that point, you're going to have to make a decision. So at some point in the future, and you're going to have to be able to say, I'm kind of 50-50 on FOMC days. Sometimes I make money, sometimes I don't. And then even when I don't make money, I make some money, but I give it back. Like there's all these little things and these variables that you want to track, and you need that data. So that's what I was talking about. You have to make the decision that, even if it moves 20 or 30 points for the day, and you hear everybody else posting all over social media. Well, first of all, we know how that goes. Don't do that. Like just don't look at what people are doing and compare yourself to that. Like you can look at what they're doing and maybe use it as motivational, but certainly don't get mad at yourself because you're not doing what they're doing, because you're never really going to be able to do what they do. You're going to trade differently. So keep that in mind. I'm sure you already know all of this stuff. Like this is just common knowledge. Everybody knows these things, but anyway, this will give you a pretty good idea of, for some people, they want a lot of action, a lot of activity. They want to be trading. They hear all these guys on YouTube saying that they're just like killing it with all these moves. And I would say, be careful. Like watch them for a while and see if they are consistently profitable, not just month after month or to pass an evaluation, because I think a lot of people can get lucky and especially if the conditions are right, you can pass an evaluation, but can you hold on to that account that you got after passing that evaluation and then hang on to that account, get your payouts consistently, and then hold on to that year after year. Like for as long as they will let you own that account or work that account, can you work that particular account without blowing it up? You'll see a lot of people that will pass, but they blow up their account after a few weeks or after a couple of months. And then they go back in and they just buy another one. And there's nothing wrong with that either. Anything. If you're making money, go ahead. All I'm saying is I just don't, I prefer not to do that. I just don't want to trade like that. I used to scalp. I used to trade fast and hard and all the time and every hour that I could. And I just don't need to do that anymore. This gets me my payouts with companies like Apex. I can do this consistently. So if Apex will let me take a payout every 2 weeks and I'm trading my Apex accounts that month or that quarter or whatever it is that I'm doing, and I cycle between different companies, different accounts, and I'll trade them at different times. So in other words, if I'm working one particular account and I want to pay out, I can do that consistently. That's all I need to do is just make sure that I know what it's going to take for me to cross that line and know that I'm going to get my payout within whatever the number of payouts that they allow me on any particular given time. Each company is different, so you have to look into that. So let's go back over here to the start of the day. The blue dot right there, that's the first 5-minute bar. Again, that's 9:30 New York time. My charts read 6:30. That's because I'm in California. I'm 3 hours behind. The red diamond, that's bar number 6. You've heard me talk about bar number 6 all the time. We talk about it all the time. And I say, if you're still struggling, if you're still chasing price right when the market opens, and you're not too good within the first 30 minutes when the market opens, your statistics don't show that you're really that profitable, well, then just stay out of it and wait until after bar 6. A lot of people do that. I didn't create this opportunity or this situation. I saw it and it made sense to me. Obviously, at the top of the hour, that's a trigger for me. A trigger meaning that I know that certain situations can develop at the top of the hour. Also, right around the 15-minute bar, things like that. So every time it's a little bit different, but I have to be sitting up and being aware. I have to be aware of these particular triggers or setups or levels, whatever my levels are, and I can determine those levels before I sit down to trade. Right, this green line that you're looking at right there in the middle of the chart, well, that's last night's closing price, and you can see how it reacted, and I can see how it's reacting here. It's just sort of oscillating sideways. Now, there is a bar right here that created this reversal. I saw that. We were in the chat room and I measured that. So I said, if this thing goes to 5.25, that would be nice. That's 5.25. I didn't take this trade because I wasn't too sure that he was even going to go to 5.25. I thought that the range from the high and the low, what we were seeing, and based on the expectation that FOMC is just a few hours away, I thought that they were probably going to move price around like this. Looking at these key levels, looking at the first 5-minute range, that's a very a specific level for me to look at every day. Like every day, I mark off the high and the low of the first 5-minute bar. Sometimes it has an impact on the setups that I get, and other times it doesn't. And the way that I know when it does and when it doesn't is that I've done this for so long and I collect the data that I know what to look for. This isn't like an automatic fix that you're going to be able to see somebody do it and they're going to go, okay, well, I'm going to start highlighting the first 5-minute bar on my charts and tomorrow I should trade better or something like that. Like maybe, the conditions and you might see something that you might recognize. But again, like we all know, you have to study and you have to practice and you have to really understand what is going on and what kind of edge can you develop as a result of finding certain levels that might give you that edge where there's going to be some kind of catalyst or reaction. That's all. That's what I had to develop. When I first started, isolating the first 5-minute bar, I had to sit back and watch it like for a few weeks. Like I kept paying attention. Okay, well, on this day, I see that it sort of broke down and took out the low of the first 5-minute bar, then went back up and took out the high of the first 5-minute bar. Now we're in breakout mode, right? We kind of go lower, hit that level of support, bounce back up. There's a reversal. On the larger time frames, it reversed. That's why I was looking at this as a reversal here. It did that. So everything's kind of lining up. It's creating that breakout mode, but it's still moving sideways and the range is relatively tight. So what are my choices when it's relatively tight? Do nothing or scalp. Scalp, I still think that if I'm going to get into a trade, I want to get 5.25 points. Anything less then I'm just guessing. The conditions aren't right for me. And I could do it, like if I adjusted the way I'm trading and I'm okay with taking 2 to 3, 3 1/4, 3.5, something like that, go down to a 1 minute time frame. I can do all of that, but I just prefer not to. So I'm not saying that you can't do it any other way. I would never say that. That's what makes the market. There's so many different ways to look at it, so many different ways to trade it. It's whatever you select, and this is the way I do it. So I still didn't think that the range was appropriate for me to take any of these trades expecting the 5 1/4 point trade that I'm looking for. That's what I want. I want a 5 1/4 point move. And then, all of these other little technical signs that are showing were just pretty much going sideways. So I really didn't do anything. That red square is bar 18. So that's another sort of marker throughout the day that I use to highlight certain opportunities. Today, it really didn't do anything. It was just like there was no reason to really pay attention to it. Other days, it does give me an opportunity to pay attention to it, and it provides me some kind of a signal, some kind of confirmation, something like that. Each day is different. So you have to study what it is that you're using in your trading system to know all of the different components and when they're going to appear, when the conditions are right, all of these different, everything. So over here, there was a candle that I got a lot of questions in the chat room. Is this the breakout? Is this that clamp down bar that you're looking for? It's closing below everything else over here. And while I would say, yes, that's the bar, but this was before the FOMC release. So this wasn't a reaction to that data. So when it's not a reaction to this data, and I'm still not too sure, the first signal, usually the first trigger bar or signal, will usually come with some kind of a pullback or a retracement. So I won't jump in when it takes out the low of that bar or on the close of that bar, even if it looks like a trigger bar. The other problem that I had is it is sitting here at support, and there's another level that you can see that blue line down there. That's another level from earlier this morning off to the left. So I would have preferred to see it clear that level too. So I'm thinking even if it does move on the next bar and it goes lower, it's likely to pull back, and I could look for a second signal that's similar to this one that you see right here, a similar trigger bar. That's what I'm looking for. Very often that happens. In almost every instance, when it's not related to economic data, if I'm not too sure, I'm okay to let it go because I'm looking again for the trade that I know is going to go to that 5 1/4 points. It may go further, and then it may continue to trend. I don't know until I get there. I can see some of the signs that it might do that. It may be one of those days. But my first target is always going to be that 5 1/4. So I'm going to wait in a situation like this. I do it all the time. I wait for a second similar trigger in the same direction to confirm this bar that I see right here. And if we move it over, we never got that. This is not a trigger for me. This is obviously not a trigger, and it's a reversing, and it would cause me to sit up and wait. And then the next bar starts to move even higher and takes out that price swing high. And then we get the pullback. That's not a trigger for me. And then it takes off with FOMC. So I stayed out of the way and I avoided shorting it. Again, there's plenty of time if it's going to trend. And if FOMC was going to create a situation where it was going to move down lower and it never took out that high where that blue line is, then maybe it would have given me a second reversal, a second, bearish trigger bar that would have looked similar to this bar that I was sort of sitting up and paying attention to see if there was going to be any follow through to that one. So there was no reason for me to short it. I don't short in situations like this. I wait. I know that there's probably going to be pullbacks. I sit through these things all of the time, and I'd rather not. At that point, if I get into them and I have to sit through the pullback, I have to widen my stop. I don't need to do that. So I stayed out of the way. I didn't chase this up here. Yes, there was a pretty decent little move right there, but I didn't chase that because I think that when it moves up, even if this 5-minute bar closes and then it takes off, it doesn't always take off. It could dip down lower than the typical stop loss, stop me out, and then continue straight to the target. I don't want to put myself in that situation. So I'm going to wait for things to settle. So I waited for things to settle. Again, this will give you a really good idea of whether there's a lot of activity in my chat room or whether I'm the kind of guy who just sits there and says, I'm waiting, I'm still waiting, I'm still waiting, I'm still waiting, I'm still waiting. That's what you hear me say quite a bit. So this was another bar that closed up there. Again, the same concept. If I see something that looks like a trigger bar, this is a bar that closes above everything else up here. and it looks like we're in that uptrend, right? We start thinking, well, we're in an uptrend, we're above the moving averages, we're above the highs. We've got FOMC out of the way, we had a pullback, we can see this pattern right here looks like a sort of a pullback retracement, and then we get a move right up here. Should we get in? Still, if I'm not too sure and I think that there's going to be a pullback that could knock me out with the stop loss, the size of the stop loss that I use, then I'm going to wait. I'm going to wait for a second similar pattern. So it's going to be a bullish pattern. And on the next bar, I didn't get that. As a matter of fact, it came right back down to the high of that first 5-minute bar opening range. So it bounced here and then turned around and went right back up again. So now I'm waiting. I'm still waiting. And then it starts to break out. Here's where it starts to break out and where I consider going in, and I could see the pattern. I knew we were going to get probably a third bar going up, and it would probably go beyond the 5.25 point target. Again, it was the retracement. I know that if I'm going to play here, I've got to use a bigger stop, and I don't want to do that right now. Like, I'm not too sure, so I'm just going to stay out of the way. So it did retrace. I'm sorry, it did not retrace, and in this case, it took off. But it took off without me. So I did not take this trade. I wish I would have, but I did not. I expected that there could be another pullback, and then it would go back up, and that pullback would be, again, larger than the stop loss that I'm comfortable using, especially on a day like today. So you can see what I did here at this point. This is what I was doing this morning, and I did this in the chat room to show everybody what I was doing. I was measuring the depth of the retracement. You can see that that pullback was 10 points. And then when it did it again on the next bar, this is where I got in. I measured it again. I do this every once in a while when there's an uptrend. So if there's an uptrend and I know that it's going to go further and I've got some kind of projected price target where price would continue to go to, I'm going to do it again. So when it breaks out above this high here on this bar, I then measure the pullback. This one I think was 11. Yeah, 11 and a half. So this one was a 10-point pullback. This was 11 and a half. And when it started to move back up on the next bar, it dipped down and it turned around and went back up. That's when I got into the trade and I was able to take it for 5.25 or a little bit further. In this case, I just watched to see what it did right here, and I held it closer to the end of that 5-minute bar. So I was timing that 5-minute bar, and that was it. That's all I wanted to do. I was looking for one opportunity where I already had a trigger. I already knew the direction. I knew I had some kind of expected level that it would continue to go to. And I also wanted to give it enough time so that these deep retracements would stop or would be less volatile. And I timed it on the pullback right here. I didn't get in when it took out the high here. I got in when it pulled back, and I was comfortable with about the 10 to 11 point pullback. That's what, again, the counter moves. I talk about this quite a bit. It's the counter moves. I'm watching the counter moves in this uptrend as it's developing. This was another 1-bar counter trend move, and all I had to do was just time it as far as the measurement and the timing of the opening of the next bar, wait for it to dip down a little bit more. It went positive and I bought it. That's right there. That's all I had to do. And then put my stop just below that low, maybe below that low right there, just in case if I, give it a little more wiggle room. But I was hoping that at this point that the pullbacks were over with. Usually on the second or third, it's usually over with. And then especially with the reaction that we saw down here, you can clearly see the timing. It's just, you have to study an opportunity like this, because this can also happen with, let's say, non-farm payrolls. It is a pattern that repeats. It just doesn't happen every single time. So you've got to give it. It's going to take more time, more months, more years for you to get more opportunities to experiment with it or practice the trade that you see. It's kind of like Lance Brightstein talks about, take that one trade and see how you can trade it 5 more times, 10 more times today when we get the pattern. How do we do that? Well, we want to dissect it. We want to do a complete write-up. The people in the chat room know how I do my flashcards, and then I do on the right-hand sidebar, I do a full write-up, and then I mark up my charts. But on the right-hand sidebar, I do a full write-up of everything that I saw and everything that I either did right or wrong or what I was looking at, and then how can I improve that. And then, of course, the physical write-up. I have worksheets that I print out, and I want to handwrite them. Like, I want to spend a lot of time doing it, in addition to then typing it all up in my journal. Do you have to do all that? You don't have to, but I do. I have to, and I see that that's what all the other successful traders do. They take that much time. They put a lot of effort into it. 2, 3, 4 hours, writing everything up, getting as many opportunities to experience this moment And then, of course, your highlight reel. You make a short video, use Loom or whatever little program that won't, tax the resources on your computer. Maybe you can just keep it up a 5-minute video on your Loom uh, account. That might work. And just kind of review it and then watch it over and over again. And then sometimes whether I have my phone or a tablet or something like that in the evening, I'll go back in and look at it again. And I make charts. I actually make a slideshow presentation for myself of all of these charts, 1, 2, 3, 4, or 5, six charts, and they're all on there with all of my markup and my the description on the right-hand sidebar of that image. So it's like a slideshow that I'm actually reviewing, and I just kind of trace it with my eyes over and over and over again, seeing where I went wrong, what I did. Again, I see this pattern and this kind of a pullback like this, the way it's measured, it's pretty consistent. So again, notice how long after the actual event, the actual news event. It was quite a ways after. And then I start, and it doesn't always give me this opportunity. The next time it may not look just like this. So again, I had one trade and it paid me more than 5.25 points because I was able to hold on to the trade a little bit longer into the close of that 5-minute bar. And at that point, I was done. And I did not trade it. Again, here's what it did. It curved right back down, and then I didn't take this move right here. I thought about it, but I thought, again, like I said, chat room's done, chat room's closed. I'm done. I'm done for the day. And then I'll just look for another opportunity. So I avoided trading when I was more likely to experience more chop, and it was going to force me to, if I wanted to play at that time, use a larger stop loss, which I wasn't comfortable with. But I know this pattern. I know this pattern a specific amount of time after the economic data, a more significant economic data that's going to create a reaction like this. I know that I can wait a while longer, and then it sort of all of this activity starts to die down, and it becomes a little more normal as far as the depth of these retracements and things like that, and I can count on a move like that. So that was relatively easy. Again, I had trigger bars prior to this and the trend, so I wasn't just kind of closing my eyes and then just clicking the buy button. That's not what I was doing here. It was timed, and I knew how I was going to get into this trade and how many more moves were likely because I know this pattern. I've studied this pattern. So that's all I was doing here. Again, very, very careful. That's what I do in my chat room. I'll find maybe one trade in a day like today. Yet other people, they probably had a lot of fun scalping all this. I didn't. This is what I do. And then tomorrow, you saw what I did, the day before. That's a pretty normal day. Yesterday, Wednesday was a pretty normal day. All of these other days are pretty normal as far as, the 2, 3 trades a day, sometimes 5 trades a day if, the market provides that opportunity. But they're 5.25. Sometimes they go a little bit further. Some days, it'll trend. Like the other day, it just kind of trend. It just kept going all the way until the close. And I was able, I think that was a 27.25 point move. Doesn't happen every day. Sometimes I've had days where I've got close to 40 points on the S&P. They don't happen every day, but you've got to know the pattern. You've got to know what it is that you're looking for and how to trade it. So you got to do a lot of study before then, right? You got to be ready. You got to be in an environment where somebody can walk you through that and explain exactly what they're looking for. So if the way I trade feels good to you, sounds good to you, seems like it would feel good to be in an environment like that where it's just not, I'm just not, it's just a stressful environment to me to have a lot of people trying to find trades all the time. I really didn't do anything here. Like there was nothing for me to do. And it went on for hours and it can be pretty boring, but I don't think it's boring. I think it's interesting, right? Like we're really, really calculating and measuring and doing a lot of work here and trying to figure out, is this the right time for me to get into the trade, for me to get in the trade? Like, I don't really care. And I know that other people are probably just tearing this up. I hope that they're doing okay. And what I mean by tearing it up is they probably have a lot of trades. Back in the day, I used to have a lot of trades on a day like this. Like I'd have, wow, I think maybe 9, maybe 12, 13 trades in here. I would just be chasing it all a long time ago. I don't care for that. And the bottom line, when I look at the end of my weeks and the end of my months, my year, I just make so much more money doing this. I don't get anywhere near, close to blowing up an account. Like I'm just very, very patient. I know for some people, they don't like it. They think I'm wasting a lot of opportunities in here. Maybe I would say probably. Like if you've got a system that lets you trade in here, do it. Do that. I just don't do that. That's all. And I'm really, really adamant about making sure that if I get a trading account, I want to hang on to that trading account. I want to make my money consistently. I want to keep building that trading account. And I'm Not a gambler. I am not a gambler. I'm not going to buy on a 50-50 type trade and just hope that it pays off and pays off big because I know that there's economic data around the corner or something like that. Like I'm going to do this carefully. So that's what I do in my chat room. If you're going to join my chat room, just be prepared for that kind of activity. And there could be days when it's slow. It doesn't mean that every FOMC trades like this. That's not what I'm saying at all. Um, Non-farm payrolls, same thing. Like it's the same behavior. I just sit and wait. Sometimes I get an opportunity, sometimes I don't. Thanks for watching.